At the beginning of this trading week, traders are showing a rise in interest in safe haven assets. They are really preoccupied by tougher containment measures in Europe and a possible global lockdown. In recent 5 weeks, the number of new virus cases in Europe has almost doubled. Moreover, on Sunday, the case tally for the disease exceeded 10 million. In the United States, the epidemiological situation is also alarming. In the interview with the Washington Post, Dr. Anthony Fauci said that the US would hardly stop the virus spread as people congregated indoors due to the cold weather. Thus, the US dollar index, which measures the value of the dollar against the basket of 6 world currencies, jumped above the key level of 94.00, hitting a new month's high. The US dollar is gaining in value amid a threat of a new wave of bankruptcies and expectations of political turbulence in the United States. Investors are sure that the election results will be contested. On this background, the US stock market is consolidating near 3 months lows after the worst trading week since March. However, the dollar-yen pair that usually follows the US indexes opened the week with a rise. Analysts suppose that the price may fall if Donald Trump loses the presidential election. That's why the yen's dynamic will be unpredictable until the first election results. If the price consolidates above 104.83, it may climb to 105.40. If the quote returns to 104.20, it may drop to 103.75 or even deeper. Notably, the yen's growth could be triggered by the signs of the Chinese economic uptick. On Saturday, the National Bureau of Statistics of China reported on a higher business activity in the country's manufacturing sector. Of course, the figures were lower than in the previous period, but still in line with the forecasts. At the same time, China's non-manufacturing PMI soared to a 7-year high of 56.2 points, reflecting a confident recovery process after the coronavirus crisis. According to the report prepared by market experts, business activity in China's manufacturing sector reached 53.6 points, showing the best performance since January 2011. Nevertheless, traders remained cautious concerning the Australian dollar that's extremely sensitive to news about China's production. The fact is that China is the largest consumer of Australian raw materials. Thus, the Australian dollar dropped against the greenback. On Friday, the price declined below the support level of 0.7058. Now the technical analysis experts foresee a slide to 0.6970 and 0.6938. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.